Hi, folks. Ryan Honeyman here from Lyft Economy. Many folks have come to us over the last 10 years and asked, how do I get more involved in creating an economy that works for the benefit of all life? They also ask, what skills and experiences do I need to help make this transition? So 3 years ago, we created something called the Economy Mba to help address this and similar questions. Lyft Economy's Economy Mba is an online course that's designed for entrepreneurs, aspiring entrepreneurs, students, recent graduates, employees, and folks who want to learn more about transformational next economy strategies and businesses. Join the growing alumni network of nearly 250 alumni who've gone through this program and learned essential skills and hopefully built lifelong relationships for catalyzing businesses in the emergent and regenerative economy. So we encourage you to check out our course. You can go to lifteconomy.com/MBA. The next course, Cohort 7, starts on September 21st, 2021. So once again, go to www.lifteconomy.com/MBA. And now, on with the show. Welcome to Next Economy Now. The goal of this podcast series is to highlight the leaders who are taking a regenerative, bioregional, equitable, democratic, racially just, and whole systems approach to creating the new economy.
Phil, how you doing?
I'm well. Thanks for having me on, Ryan.
Great. So my first question, I'm not sure many people even know what 20 million and change is. So perhaps you could start with a overview of what it is you do, and I'm sure people understand what Patagonia is, but I'm not sure many people know what 20 million and change is.
Sure, happy to. 20 million and change, it's our in-house venture arm that we launched a few years ago, where Patagonia invests in environmentally responsible companies. Typically, these are early stage companies, startups, and this will be their first institutional round of funding. So it's a nice complement to what we've historically done through our 1% for the Planet giving on the grant side, where we give money to grassroots environmental nonprofits. But with 20 million change, we make actually direct investments in these private companies. So we have our philanthropic arm where we give through 1% for the Planet. And I oversee 20 million change, which is our investment arm, where we make these direct investments in companies.
Great. And were you there at Patagonia, or at least are you privy to the conversations that led to the creation? Because it seems like a big move for Patagonia, it clearly is. And I'm wondering what sort of the conversations and the pluses and minuses of doing something like this were.
Yeah. Well, the whole origin was Patagonia as a company has had financial success. And when we looked at, okay, what do we want to do with this cash? I mean, it's called excess cash on the balance sheet. We thought that actually using it to make investments in these early stage companies that could provide a direct benefit to our supply chain or have some kind of benefit outside of our supply chain, because it's a viable business model that uses less water, uses less energy. It's something that has call it a Patagonia-like model, where it's a for-profit business, but there's some environmental good that comes from that business. So that was the whole origin for starting it. We thought we can use our capital to invest in these early stage companies to help clean up our outdoor apparel or our food supply chain with Patagonia Provisions, and then also we could look outside of the supply chain with some key areas, which for us were food, water, energy, waste, in addition to apparel.
Got it. And so did this come from perhaps Yvonne or Rose Yvonne Schoenar, the founder of Patagonia, Rose Marcario, CEO of Patagonia? Did this come from them starting to really start to think, is making environmentally friendly clothes in a responsible fashion, is this enough to really create quick enough change for the environmental crisis that we're seeing? Is this sort of a response to that?
Yeah, exactly, Ryan. So it's an extension of our mission, which is use business to inspire and implement solutions to the environmental crisis. And oftentimes, early stage companies are some of the ones with the best innovations out there. So we saw that if we could provide capital to these companies and then work to introduce these companies to our partners in our supply chain, that's where we'd get the biggest bang for our buck in terms of pushing out innovation, in addition to what we do here internally. But it's a nice complement where we can clean up our own supply chain through investment.
Right. And so perhaps for the listeners' benefit, what are some examples of investments recently, or perhaps maybe a little bit of an overview? How many investments, and who are some of the companies that you're excited about that you've invested in?
Sure. We've done 14 investments to date in 12 portfolio companies. So we've got a good representation across those different industry verticals that I mentioned: food, water, energy, waste, and apparel. Some of our first investments I'll touch on and talk a little bit about how we've started to pull this through into our supply chain. Our first company that we invested in was called CO2 Nexus, and they have a technology that uses liquid CO2, so it's completely water-free. It's a closed-loop system where any chemicals that are used in the process to clean and coat textiles is recaptured. It can be either reused again or repurposed and disposed of properly. And so with CO2 Nexus, I can't give the exact details of what we're doing because it's not public yet. But we just had an instance of what I'll call a win, where we are modeling that we'll save 3.5 million gallons of water each year just for Patagonia. And then if we use our historical model for Eco Innovations, where we open source that to the rest of the industry, and that's just going to get amplified by a huge factor. And so that's our first investments. We just this last week actually had this big win, and we'll talk publicly about it as we roll it out through the Patagonia line. So really excited about that. Another early company was an investment in Borreo, who makes skateboards and sunglasses. And these are three entrepreneurs that came together. One was a business finance guy, one was a product expert from Boeing, and one was an environmental consultant. And they formed this business where they take skateboards and looked at it and said, okay, we've got this problem where there's a lot of plastic that's going into making the deck for a skateboard, and it's virgin nylon, it's petroleum based. And so they saw this need where they could replace it with a eco-based product or environmental product. And fishing nets are a huge problem off the coast of Chile. So you've got Chile with that long coastline. At the end of their life, the fishermen will either just dump it in the ocean or haul it to a beach. Sometimes they're burned on the beach. Best case, they're trucked to a landfill. So these entrepreneurs came together, saw this environmental problem. They've created a business model where they'll pay the local Chileans to clean the nets, collect the nets, and then those fishing nets will ultimately become the skateboard decks through a mechanical recycling process. And they've since rolled out sunglasses. And then now on the Patagonia supply chain line, we're looking at, okay, we use nylon, right? So how can we use these fishing nets in our own supply chain? We're working closely with the Borreo guys to make that happen here in the next couple of years. So those are just a couple examples of how we've made an investment and then ultimately pulled it through into our own supply chain.
Awesome. And do you see, for example, so it's identifying holes in your supply chain and potentially filling them. And do you see, is this a sort of a business direction for Patagonia that could potentially become a much larger part of its company? For 20 million and change, I think the company itself is around $1 billion in revenue almost. Is that correct?
We haven't stated publicly, but yeah, we're getting up there.
To the B, to the 3 commas.
Yeah.
So, okay, so do you see this as part of a larger, maybe in 25 years, what does 20 million and change look like? What's sort of the world that you're moving towards, and is it just supply chain, or is it other industries and areas too?
I see this as a big part of our innovation platform going forward. So we have a lot of in-house expertise with material and textile experts. Oftentimes we will have commercial relationships, but in addition to just working with them on a joint development agreement, oftentimes these companies are capital constrained. So if we do provide an investment, they can bring on an additional scientist and work on this problem that's specific to our supply chain that we're trying to solve. So I think it's going to be a great complement just to our in-house R&D innovation going forward. And then, thinking about on the food side with Patagonia Provisions, what we're trying to do there is disrupt the industrialized big ag commodity type supply chains. And so with our own local regenerative investments where we're trying to restore soil health and bring products to market in a responsible way, not just wild caught salmon, but what's the run that the salmon's taking from? Is that a healthy population, or is that one that even though it's wild caught, it's not a sustainable source of the fish? So making key investments in the ag supply chain and ag infrastructure going forward is something that I very much see us doing over the next 10, 20 years. So I think it's going to be a huge component of both. And then in terms of the scale too, we've already committed more than that $20 million amount through our investments, or even looking at should we rebrand the name of the fund, just because could it be conceived as too limiting, because we've already made a lot of investments so far, and we continue to project making big investments in both the outdoor apparel and food supply chains, and even beyond, in terms of companies that are coming out with some really cool business models that have a direct positive environmental benefit.
Got it. And when you said, so what's the amount of investments and stage of the companies you're looking for?
Typically, these are earlier stage companies. So we like to come in, let's just say our average investment's $500,000 or $1 million. We like to come in and typically take 2 to 20%. So if it's just a guy with an idea and he's asking for $1 million, but he hasn't put in any of his own capital, that's probably a little bit too early for us at that point. On the other side of the equation, if a company has already raised $200 million and they've got $200 million in revenue, they're probably too far along. So we could still work with them in terms of a commercial relationship where we do a joint development agreement, but probably too big for a 20 million change investment. So generally, companies, if they're in that 1 to 20 million in revenue, that's our sweet spot where we like to invest. Although we can go bigger and we can go smaller if it's a great fit.
Awesome. And you mentioned soil health as one of your areas. At Lift Economy, we're especially excited about soil health because of the potential. One of our partners, Kevin Bayuk, recently went to the COP21 conference in Paris and talked a lot about and found out a lot about interesting next economy sort of innovations in carbon sequestration and the capability of compost to be applied to soil and sequester carbon. And it's very exciting. And maybe could you talk a little bit about what you're looking at in terms of regenerative agriculture and soil health in particular?
Sure. So a couple things. One, we did make an investment, one of our earlier investments, in a company called California Safe Soil. And they have a liquid fertilizer that's sourced from unsold food. So you've got all these grocery stores that have food that's past its sell-by date, and they typically will just dump it. And so these guys have a business model where they come in, collect all that unsold food. They put it in the same trucks that would be backhauled empty to the distribution center for the grocery store. And then they grab that food, they mechanically break it down. They add enzymes, just like the enzymes in your stomach, and turn that into a liquid fertilizer, which farmers can use it as an amendment. It builds the soil health. It reduces the need for petrochemical fertilizers and pesticides, and something that we're really excited about in terms of restoring the health of the soil, as well as just our other key areas of diverting waste, using less water, et cetera. So that's an example of an investment that we've made that touches directly on soil health. And then with Patagonia Provisions, certainly thinking about food and the health of the soil, carbon sequestration, moving away from petrochemical fertilizers and pesticides and herbicides. It's something that we're very passionate about, and looking closely at for every type of food product that we make. Is it something that what's the carbon impact of it in terms of transportation, in terms of how it's grown? So we're doing studies on some of our products now that do exactly that. And I think that's going to be a big focus of every product that we come out with provisions in our food supply chain.
Great. Yeah, one of the questions I've struggled with in terms of Patagonia is you guys are so far ahead in many ways of the industry, definitely the clothing industry, and so far ahead in many ways in terms of just being socially and environmentally conscious business leaders, that there's this paradox I've noticed where I at least, and I think maybe other folks, look to Patagonia to solve big challenges like climate change, saying, "Hey, what are you guys doing?" You clearly are doing so many things, and at the same time, I'm almost wondering, do you see Patagonia moving quick enough? Because the basis for this question is when Kevin returned from COP21, we both have, all three of the people I just mentioned, me, you, and Kevin, we all have daughters who are very young, and the outlook for the climate is not very good, especially in 50 years with a degree, a 1 to 4 degree change in temperature, global temperature. Do you see that the fundamental sort of business model of selling socially responsible clothes and making incremental improvements, do you see it as enough to really address the sort of crisis that we're facing globally?
I don't. Yeah, and it's a little disheartening too, because that's one of the reasons I was drawn to Patagonia, is because we have this business model where we build the best product in terms of outdoor gear and food. We do it in a manner where we try and cause the least amount of environmental harm as we can. But at the end of the day, we're a polluter, and we don't deny that. And I think in terms of what can a mid-size outdoor apparel company do to positively impact climate change, I mean that's a tough one. I think that through 20 million change, we're going to have to look at investments that have a positive impact in terms of is this a business model that can be carbon neutral or carbon negative? That's a huge area of focus going forward. Certainly with the food side too, with provisions, it's a small in-house food startup, but we plan to grow that business. I've heard Yvon Chouinard, our founder, tell me that he thinks that's going to be bigger than our apparel business before too long. So I think to the extent that we can have some wins on the food side, make some key investments that pay off, then ultimately, to answer your question, I think we're going to have to partner with others. So on the investment side, finding like-minded co-investors who have way more than $20 million to invest is going to be huge. And then on the food side too, like if we have some big wins with products that are successful, we grow in a responsible way. I think that's when some of the big majors are going to step back and say, okay, we're going to move more towards organic agriculture and move beyond organic agriculture, where we're going to look at the health of the soil and look at carbon sequestration. I think when we demonstrate that we can do it in a profitable way, then that's when we're going to inspire the other companies to jump on board. And I think that's where you actually move the needle in terms of a meaningful difference. It's when you do inspire those other companies out there.
I think you just touched on perhaps what I was sort of getting to is the clothing side of Patagonia really the future? And I think, even Yvon struggled with this for years in all of his talks. It's the growth, this constant growing, and the consumer just wants more, and you guys build great products, so it's not like you don't want your customers to buy your products. But I think what is really interesting is that I've sort of sensed that Patagonia may be making moves, and I think you alluded to it, towards potentially food or regenerative agriculture ultimately being a much larger and perhaps larger part of Patagonia's business. Could you maybe expand a little bit about what you think that could look like? Is that different than sort of is sports bars and healthy, salmon and bison jerky, is that sort of the first step, do you think?
I really do. I don't think we're going to solve the environmental crisis by selling jackets, even if we do it in a responsible way and inspire other companies. I think taking a more holistic approach to business that looks at going beyond maximizing shareholder return, so it considers people, the planet, communities. Those things are going to be huge in terms of Patagonia's focus going forward. And this is what we've done the last 40 plus years, but also looking at especially the food side of provisions. And extending all these lessons that we've learned in the outdoor apparel supply chain, so learning how to make a high quality jacket with the least amount of environmental harm. Those aren't principles that are only limited to the outdoor apparel space. You can do it with food. You can do it in a lot of different industries too. So I think expanding the Patagonia Works umbrella, which is our holding company, into different industry verticals could make sense. And then certainly with 20 million and change, making these key investments in our own supply chain, but also beyond in those areas, I think are going to be a huge part of what we do going forward.
The structure of 20 million change is incredibly interesting, and I was there with a hundred other folks at the panel you gave at SOCAP, the SOCAP conference. For those of you who don't know, Social Capital Markets in San Francisco in October of last year. And it was really interesting because Seventh Generation fellow B Corp was there. Cliff Bar has White Road Investments. Seventh Generation has Seventh Generation Ventures, and Patagonia with you at 20 million and change. One of the questions that many B Corps I think may be asking is, how do we follow in the footsteps? Because it seems like this is a way that B Corps could take their core business model and divert some of the capital, as you guys have done, to either supply chain, growing the supply chain, or towards companies that are growing this regenerative next economy. So what would you say to a CEO or another B Corp or a company that's thinking about starting a 20 million change? What are some of the key things they should be thinking about?
Well, that's a great question, because I've actually had some discussions with other B Corps that are looking to do something similar. And I don't think that what we've done is necessarily one size fits all, because every company is different. Are you public? Are you private? How early stage or late stage are you in the development cycle? If it's just a startup, they probably don't have the capital to launch an in-house venture arm. But certainly some of these bigger, more established B Corps can and are thinking about it too. And I would say it's a great idea, not just for this, the pure social and environmental benefit that you get from it, but for let's say Patagonia, for example, where we have historically open sourced our innovations, whether it be a ULEX bio-based wetsuit that's grown from a desert shrub as opposed to a petrochemical based neoprene. Instead of locking up that innovation for 7 years or 10 years, which is typical in terms of the commercial side, we open source that. So for us, that's what we've always done. That's what we will continue to do. But now if we actually make an investment in these companies through our in-house venture fund, then we have a better financial return once that does get open sourced and scaled and our competitors or adjacent industries adopt it. So it's a model that we've just always done, the whole open sourcing thing. But now with the venture fund, it's a nice way to complement that. And the environmental good is certainly amplified when you open source it. But now as an investor, it helps us enhance our return on invested capital that we can use to make additional investments. So it's just been a really good model for us going forward. The one other thing I'll point out, whether a company is a B Corp or just a non-B Corp that's out there, a traditional business, we've made a couple big investments in solar recently. We've closed a solar fund in Hawaii. We've recently closed another solar fund here in the mainland, where we've taken Patagonia's tax equity and come together with a couple other B Corps on the bank side and the solar finance and development side. And we're, instead of cutting the government a blank check at the end of the year to spend however they want with our tax dollars, we're putting that directly into residential solar. And through those investment tax credits, which were just recently extended, you get a great double-digit return, and it's amazing for the environment. So I would say any CFO that's out there should look closely at investing in solar with their tax credits, because it's a quite good return for relatively low risk. It's something that makes total financial sense in addition to all the environmental benefits that come from it. So that's my shout out for all the CFO types out there to consider some solar investments going forward.
So just to clarify, usually a company, just from my own understanding, a company usually pays taxes to the government, but this is a way that you can take that same payment and invest it in solar. Is that correct?
Yeah, exactly. Through tax credits. So the the federal government has given an investment tax credit for renewables, and solar certainly counts as a renewable. And how it works is that basically 30 cents on every dollar that the solar costs, you get back in a tax credits. So if the system that you want to purchase cost $100 million, then you'll get $30 million in tax credits. In addition to, as an investor, you get to own the fund, you get some income through the solar that's generated there from energy. You also get depreciation, some other benefits, but a big benefit is these tax credits. And so instead of just cutting the government a check at the end of your tax year, you can get that back through these tax credits. And we've established some solar funds, and we're always happy to walk through specifically how it's done. But yeah, the risk return trade-off is great on these investments.
Great. So clearly, being a first mover in terms of the internal venture capital and placing investments in early stage companies isn't all rosy and rainbows. And I think so I think one interesting question would be for you. What are some of the challenges that you faced and that could help other mission-driven companies, B Corps, et cetera, think about some of the potential challenges for doing this?
Well, I'll call it a challenge, but in reality, I think it's more just something to think about, and that's to take the long view. So whenever you invest, the typical venture capital model is to raise outside dollars from LP investors, find companies to invest in, make those investments, and then if you have a 5-year fund, it's exit the investments and return that capital back to your LPs, your outside investors, and then do the whole thing over again with the fundraising side. And in our view, that's very much a broken model. So for 20 million and change, we very much take the long view. So we have one LP, and that's Patagonia, which is owned by the Chenards. And so we can take the long view when we make these investments, and it has the benefit of allowing the entrepreneurs to not get distracted from their mission. So if they're trying to create a bio-based product or a food product that restores soil health in addition to tasting great, with the long-term view, we're not pushing them to, okay, who's going to buy you in the next couple of years? How quickly can you grow and increase your profitability? So we can very much take the long view, and it works in our model. So that would be certainly one challenge that somebody would face in terms of can you have that long-term perspective when you make these investments? Because when you do, I think that we're going to demonstrate with this model that it can be successful not only financially but also socially, environmentally. But if you are constrained by what's our quarterly growth or what's our short-term return on investment, then you're going to miss out on a lot of these opportunities. I think the challenge of what's the holding period, what's the time horizon, is something that people are going to have to wrestle with. In our view, the longer the better.
Right, because I don't think many people understand that taking venture capital money in the traditional model from a sort of Silicon Valley firm means that you have to, within 7 to 10 and at most maybe 13 years, pay back that venture capitalist, so that the venture capitalist actually borrowed money from another organization, usually something like the Harvard Endowment or CalPERS, the California Employee Retirement System. So what Patagonia is doing is essentially saying that 7 to 10 year horizon where you might get a ton of pressure from your venture capitalist to repay the limited partners, such as Harvard, that Patagonia doesn't put pressure on you during that 7 to 10 year period. And could you talk a little bit about, Phil, is it 30 years that you need that money back, or what's sort of the time period you're looking at?
Yeah, I don't think there's an answer to that, Ryan. And that's it's tough because I wish I could say, the magic number is 12 years, and that's your holding period, and that's when it's a good time to return capital. I think every company is different. Borreo, the skateboard and sunglass guys I mentioned earlier, we just did a follow-on investment, and so I had that discussion in terms of, okay, what's the liquidity look like? And we're not pressuring them to sell the business or go public or anything like that. But as an investor, it's important to just consider, what the liquidity could be. And for us, dividends was the answer that we landed on. Like, we want them to grow and scale and look at replacing virgin nylon in our supply chain and other supply chains. So things that are even way beyond what they're initially doing with the whole making skateboards and sunglasses model. And that's going to take some time to do. So once they get to the point where the company is able to pay dividends, for us, we're totally fine with dividends in the state private scenario. So in that case, it could be 40 years, 100 years. I mean, there's no set time horizon. And then after that, we give them the capital, make connections strategically where we can for them, but then get out of their way. So we don't have a discussion with the entrepreneurs or with Rose or the Chenards about, okay, this is where we think we're going to exit in 5 years or 7 years. So it's a discussion where basically we feel that if the company has a business model that is called a little Patagonia, where it does the least amount of harm, it builds the best product, it can inspire other companies eventually and scale, then that's going to be a good financial investment at some point. We just don't know when it's going to be.
Right. And it's for people listening, this isn't because I could see some people saying, well, they might make investments that aren't as attractive to other venture capitalists because they don't need a return that matches that similar, 30x profile. But just to be clear, you're not investing in companies that you're not running a nonprofit fund. Like this is, you're looking for a return, right?
Exactly. Yeah. And that's where I mentioned earlier at the beginning of the interview, we have a great team on the grant side where we fund thousands of grassroots environmental nonprofits. And so we're very much involved in the philanthropic space, but these are very much for-profit investments. Strategically, we're okay taking what I'll call a below market return from time to time, especially if it complements our supply chain, where we really think that there's some environmental good that can come from this business model. And maybe it's a low to mid single digit return. And we're okay making those types of investments because our mission is not just to maximize our financial return. But I would argue that there are some investments in our portfolio that I would put up against anything in Silicon Valley. And there are some co-investors that are Silicon Valley investors, and they're doing this because, they think the environmental benefits are going to be great, but they think it's going to be a large financial return as well.
What are some other challenges? I think the fund has been up for at least 2, maybe 3 years. So what are some of the other things you're seeing that perhaps other companies who are considering setting up a similar fund should think about?
One of the challenges is that it does take a lot of time to do that close examination of supply chains, and for us that's really important. So if we make an investment that doesn't turn out to be a great financial investment, that's not a huge deal for us. If we do make an investment in a company, even if it is a great financial investment, and we miss something in terms of their supply chain, like maybe the workers that were making something in an inhuman condition for the factory or something like that, that for us is a major deal. So we do have to spend a lot of time examining these companies that we invest in terms of what chemicals are used in making the product that they're making, what type of trees, if it uses wood, what's the type of trees? Is it a type that it's the last remaining forest of this type in the region? So all these questions that go above and beyond the typical diligence, which is commercial, legal, accounting. So we do all of that diligence as well. But we definitely spend a lot of time on the social and environmental side, which is it can certainly be a challenge, especially if you don't have that expertise in house. Luckily, we have a very strong team of environmental and social consultants that I lean on for the due diligence there. But it's something that a company that's looking to do this would have to certainly take that into consideration.
Right. It's not just, is it going to have a great IRR and be a good mission fit on the surface? You really want to make sure that they're through and through a business that you believe in.
Exactly. And you can't get there just by poking around on the website or having a couple calls with the entrepreneurs. There's a lot of questions you have to ask, and it's something that definitely takes a lot of time.
And with that, is this a global fund? Are you investing in places outside the U.S.?
We have. So we did an investment in a Swiss company called Beyond Surface Technologies. and they focus on bio-based textile surface treatments, which is right in our wheelhouse. Things like DWR for water repellency, wicking, easy care, so wrinkle-free. All these things that are made from bio-based products. They typically will look to the food industries or the cosmetic industries in terms of what can they take and apply to the apparel industry. And for us, it's a great fit because we're all about moving away from petrochemicals and petroleum-derived products and using bio-based ones. And this company happens to be based in Switzerland. So if it's a really good fit, like a BST, then we'll look outside of the U.S. But we do tend to prioritize the U.S. just because there's a lot of companies here. It's certainly easier to close a U.S.-based transaction, and that's our priority area is the U.S. But we will look from time to time outside, especially if there's a great supply chain connection.
And you mentioned, I love the idea that Patagonia does many things open source, especially with something like the bio-based rubber wetsuits. Is there a way is there any open source documentation or sort of a way that someone who's interested in doing a fund like yours could learn about? Is there any sort of materials that you have rather than the technology of the companies? But I think the fund itself is a great open source opportunity.
I mean, I don't know that we have anything codified as such. I mean, that's always been Patagonia's way. If we invest in R&D or actually make an investment in the companies to open source it. But for us, it's just what we've always done. I do think one of the things that we've done, which is unique, is in terms of investing in each company, we will embed an environmental clawback. So if a company takes a wrong turn for the environment for whatever reason, even if it's to make great financial decision and maximize their profitability, for us that's a major concern, and so we have a right to exit the investment at that point in time. So actually, within our investment docs, we will include this environmental language that allows us to get bought out if they get distracted from their mission at some point in the future.
That is unique. I've never heard of something like that, but very powerful, yes. I think.
Yeah, and it just shows that we're not just doing this because we think it's a way to greenify Patagonia and do it. Like if you look at these docs that actually have that teeth where we can get bought out, and for us it's what's really important. We're not just saying that to these entrepreneurs coming into it. It basically gives credibility in my mind that this is why we're doing it this way.
Right. And so maybe in the last few minutes here, I'd love to learn a little bit more about who else are you watching people in this space are inspiring you. Is there similar? Have you noticed? Seventh Generation we mentioned earlier, and White Road Investments from Cliff Bar. But are there thought leaders in this space that you are inspired by?
There definitely are. I think there's a lot of companies that are doing great things out there in terms of the capital markets. We're seeing more and more of an impact focus. Even Goldman Sachs has a big impact arm, and it's great to see the people with a lot of capital that can move the needle start to focus on these types of considerations that are beyond purely making a profit. So there's certainly some other funds that I can point to out there. There's some great B Corp banks that are starting to scale up, like New Resource Bank and Beneficial State Bank, RSF, Social Finance in San Francisco. They're all doing great things. And then in terms of like who inspires me, I would say I have to go back to Yvon Chouinard, our founder. Again, there's a lot of companies doing some really innovative things right now, both environmentally and socially, but he's been doing this for 40 plus years at Patagonia. And it's just great to be able to work in a place where this has been in our DNA for so long. And I'm really excited to see what the next 40 years is going to hold for us as a company.
Right. It's funny, Yvon is such a thought leader and / character. It's always hilarious to hear him talk because he's so honest. Sometimes he doesn't know he's telling jokes. Do you have any particular moment or memories of a time that he made you laugh by how honest he was being, or sort of story along those lines?
Yeah, all the time. I love that I'm from Texas, so he's what I would characterize as a straight shooter. He just says whatever's on his mind. One of the great things on the investment side is I've heard him say multiple times, like, I've got plenty of money. I'm not doing this for money. He's got some other quotes out there, like every time I've made a decision for the environment, it ends up making me money. So he's just a really unique guy, great to be around, and thrilled to be a part of this company that he's built.
Great. So last question, what do you need? Like, how can people help who are listening? Do you need, I know good deal flow is constantly a need for people looking to make differences, but perhaps that specifically, or other ideas that you have about ways that listeners in the sort of B Corp community or this sort of mission-driven community can help you?
Yeah, absolutely. In terms of deal flow, we're always looking for the next company that has a disruptive technology or eco-innovation that we can plug into our either outdoor apparel or food supply chain. So if anybody's interested, would strongly encourage you to reach out, and especially if you fit the parameters of the fund that I mentioned earlier. And then on the investment side, we definitely have a trusted network of co-investors that we like to lean on and bring deals to. But we're always looking for other like-minded investors that are out there. So if you're in that side of the house, it would be great to connect going forward. But ultimately, what would do is inspire other companies and investors to join us on this journey and use business as a force for good. Because I think philanthropic capital is great, academic research is great, but ultimately business is the most powerful thing that's going to be out there to impact this environmental crisis that we're in. So we'd love to partner up with others on that journey.
Great. And where can people reach you, Phil, and find out more about 20 million and change?
Our inbox is info@patagoniaworks.com. If you send us a note and say you're interested in 20 million and change or want to apply, that's the place to go.
Great. Well, thanks so much, Phil. It's been amazing talking, and have a great rest of the week.
Same to you. Thanks, Ryan. Be good.
Next Economy Now is a production of Lift Economy. To listen to all of our episodes, go to lifteconomy.com/podcast. That's LIFT economy.com/podcast. You can also sign up for our monthly newsletter at lifteconomy.com/newsletter. Please also rate and review our podcast on iTunes, Spotify, Stitcher, or wherever you get your podcasts. Thanks for listening.